Hi dear traders, in the new week ahead, traders will anticipate the speech by the Fed chairman at the annual symposium in Jackson Hole. Jerome Powell is expected to shed light on the outcomes of the upcoming policy meetings. Any indication of a change in the interest rate will certainly influence the trajectory of the US dollar. And now let's recap how the market sentiment was changing during the past trading week. The US dollar closed last week near the level of 103.50, logging its fifth consecutive week of growth. The latest FOMC minutes boosted demand for the American currency. On Wednesday, the document was released for the public, revealing that many voting members of the central bank intend to continue raising the rate until inflation eases to the target of 2%. Such rhetoric comes in contrast to the stance of the European Central Bank. As a result, the greenback maintained its leading position against the euro. The euro-dollar pair closed last week near the 6-week low. There is currently no consensus on where the ECB will move next, especially given an obvious deterioration in the eurozone's economic conditions. Core inflation for July has not slowed down. Meanwhile, Germany, the powerhouse of the European economy, keeps posting negative changes with every new macroeconomic report. The economic data from the UK is not positive either, yet the US dollar seems to be retreating against the pound. On August 10th, the pound-dollar pair was trading at its monthly low. However, in the course of the previous trading week, traders pushed the price up thanks to the inflation report for July. Still, elevated consumer prices increase expectations of a more hawkish stance from the Bank of England. This is further reinforced by the UK labour market data indicating high wage growth rates. All these factors have definitely contributed to the pound's appreciation. The market is also looking for growth factors for the Japanese yen. Throughout the past week, the yen continued to test the patience of the Japanese monetary authorities, surpassing the level of 146 against the dollar. The yen is inching closer to the level where the Bank of Japan started its currency interventions in the fall of last year. A much more convincing reason for the market to resume yen purchases would be a shift in the central bank's stance. Inflation is decelerating at a much slower pace than projected, and interest rates haven't changed since 2016. Gold is very sensitive to every new speculation regarding interest rates. The latest minutes of the recent Federal Reserve meeting triggered a drop in the quote below $1,900 per troy ounce. At the same time, gold remains resilient against a sharper decline, retaining its status as a safe haven asset. The ongoing situation in the Chinese economy continues to evoke concerns, intensified by the fact that China's largest property developer, Evergrande, has filed for bankruptcy in the US. Yet investors hope that Chinese authorities will finally introduce measures to stimulate the economy. Such expectations are especially prevalent in the oil market, as China, being the world's largest oil importer, would see increased oil demand if its economy rebounds. In the meantime, we observe oil hovering around the lower boundary of the trading range at $84 per barrel, which reflects persistent concerns over a potential global recession. These are the trends of the last trading week. Do not miss our daily news reports to be always in touch with the latest events. See you!